Recording in progress.
Hey guys, welcome, welcome, welcome. It is Thursday, May 21st, 2026. Starting a couple minutes late. Always fun with the technology. Thanks for the confirmation. Yep, great, great. How you guys doing? Lovely market, huh? And if you were listening closely today, you probably heard the faint sound of theta decaying in the background. Because that's what they were doing all afternoon. They were sucking out theta. They were taking out the premium ahead of the long weekend. And all you have to do is look at the VIX or the VIX futures and see how they were walking it down all afternoon. And if you had long calls, near dated, long dated, whatever, they were sucking out the theta by pushing the volatility down. And not a damn thing you can do to time it or to do anything about it. So it is what it is. But it always happens ahead of a long weekend. You got to anticipate if you're buying calls, you're buying puts. Uh, some some theta is going to be sucked out of it ahead of a long weekend. Sometimes it happens on Thursday, sometimes on Friday before the long weekend. You can never really predict it. So that's what it is. So hope you guys had a great trading day, and it was a weird, choppy day. SPX had a about a 77 point move, and we're going to talk about that a little bit more. Let's share my screen here instead of my big old mug that you're looking at. Um, Feel free to put your questions in at any time, and we'll get them addressed during the session. And hopefully we have a bunch of them today. So not sure how many people we're going to end up with ahead of the long weekend. I imagine that a lot of people are taking the day off tomorrow to make it a 4 day weekend. And if so, enjoy yourself and uh, have a good long weekend. Maybe you're going on a camping trip or taking a trip or getting on a plane, who knows? All right, so let's take a look. We're going to look at the overall market and talk about where we are and what my thoughts are. Looking at the SPX and daily, weekly, monthly chart. So we had a bit of a dip here, lasted all of 3 days, and we've already taken out this candle here. So we are about, um, call it 65 points from the new all-time high. So it was basically a pullback within an uptrend so far. Though the MACD is still negative, it is on a sell signal on the daily. That could change with one big update. And as I mentioned in my morning note, the seasonality for today and tomorrow tend to be positive. Of course, it helps when you have announcement after announcement about a peace deal. The peace deal is coming. Boom, they bump it up. Oh, there's a draft. Oh, bump it up again. This is talk about just a circle jerk of sorts with the algos. Oh no, Iran denies it. Boom, they take it down. So that's the fun of geopolitics. And believe me, guys, this volatility is not normal. So once this deal gets signed, hopefully we can resume our regularly scheduled trading program. We shouldn't have volatility like this, especially the swings intraday. And if you've traded through geopolitical events, you're already used to this. But we have the RSI on the daily at the 66 level, so it didn't really dip below 60 here. And we're above all the moving averages. We kind of undercut the short-term moving averages, the ADMA and what have you, but we're back above them. And it's like the market is a beach ball being held underwater, and they just can't seem to hold it, even though you have divergences, even though you have poor breadth. They just seem to, no matter what the news is, they want to buy it. And, the end of war means lower energy prices portend lower inflation portends lower interest rates. And so it goes. At least that's the theory anyway. But we are on a bearish PSAR on the daily chart. So we flip that over and it'll take a ride above 74.95, a close above there to negate that and do a parabolic stop and reverse to the long side. So the PSAR dot is on a sell signal, and but the chandelier never even got threatened all the way down here. So that's a good thing. So still bullish on the weekly chart. We've got last week's doji with an all-time high, and now I don't know, you want to call this a hanging man or whatever, but looks like a pretty candle to me. They tried to push it down, they couldn't, and this market looks like it's consolidating, and all signs point that the bulls still have the big advantage. MACD hasn't even flinched on the weekly, and we're still in overbought territory on the RSI. So nothing to complain about on the weekly chart. Looking at the monthly, still looks good. So we have a little top here, but we are 1 week. We have 1 week left in the month for this monthly candle to form, and MACD is positive. So is the RSI. No complaints here. Everything looks good. And, the entire options implied expected move for this week was 100 or is 133 points. We'll see what's left for tomorrow. I don't think there's very many anything important on the economic calendar or earnings for tomorrow, but so we are right smack in the middle of this. And the fact that we had a 77-point range today, what was it, 57, 87-point range yesterday. I mean, it is beyond ridiculous. So 133 points, and we haven't touched the upper edge or the lower edge. We're right smack in the center. So you could say that we're somewhat in change. Where we closed last week. We closed last week at 74.08. We're at 74.45. That's pretty much a rounding error. Not even 0.5% on a $7,445 index. So bullish, bullish, bullish. Consolidation with an uptrend. Still, my 76.80 target is still in range, and nothing that has happened this week with this pullback has upset the apple cart as far as the bull market is concerned, even though we are still intermediate term overbought, and we still have lots of signs that this market should be pulling back. And I think the worst we're getting so far is some consolidation and choppiness thus far. All right, so that's the SPX looking good. NDX. Pretty much and the NDX leads the SPX since it is, roughly 35% of the SPX. Tech is, that is. And you can see a little dipsy doodle to the bottom here. We had a doji, and we're back up in business. So we are, about 300 points removed from the all-time high on the NASDAQ index. We have 802-point range from up here to down here. And where are we? Right smack in the middle of it. And again, wide range. I bought some micro NASDAQ futures on that dip last night, and flipped them out before I went to bed. Small position. Did okay, but I was glad I didn't hold on to them to this morning since the market was down. In any case, I don't like to hold futures overnight. We've got the short-term moving average. We're above them. We're above all moving averages. MACD is on the sell signal on the daily, and we are still overbought on the daily on the relative strength index, the RSI. PSAR is also bearish. And again, the NDX and the SPX tend to trade similarly. One leads the other. And if the Nasdaq is down, it's tough for the S&P to be up, although it happens. But it is one third of the S&P in terms of technology stocks. On the weekly chart, looks very similar to the SPX. We had a doji here, and we haven't taken out the low or the high. So you could say we have pretty much an inside candle, 628. How far did we go? 567. So yeah, we did take out the low a little bit, but it was rejected. So when I say we have an inside candle, we have a candle here that is engulfed by the previous candle, and that's not the case. We did undercut it, and it was rejected on the low side, and here we are back to the upper part of the range for the week. MACD solidly positive, no complaints there, way above the zero line. And RSI has not flinched at all, still strong. And multi-chart, similarly looking, two nice big candles on the green side, MACD positive, solid RSI. So bullish, bullish, bullish. Nothing but consolidation here. Can't complain. Nothing, no signs of any bearishness other than some consolidation. Could this daily MACD sell signal propagate to the weekly and the monthly? Of course it can. But so far, we're not seeing signs of weakness on the weekly or the monthly chart just yet. And indeed, because you can see that we're already turning the corner and moving up. Did you guys see SanDisk today? I mean, talk about redonk. Here it was, hit 1600, pulled all the way back to 1278. We're 58 points away from the high. And what happens? Let me put an intraday chart. So we closed at 1542. We're down a few bucks in the after hours, but that's noise in a $1,500 stock. So it's just the stock was up 10.75% after this torrid run. Let me take this back to a weekly. Look at that. Took out last week's candle and came right back. And that's some volatility for you. And this one pretty much has a pretty high IV rank. I'm pretty sure it's in the upper edge, but SNDK, if I can type, let's take a look. Options are ridiculous here. They're so wide, tough to 63% IV percentile. And you can see here 124% volatility, 102% volatility. What this means, guys, is that this stock could go to zero or it could double from here, more than double. That's what 100% volatility implies here. Obviously, that's ridiculous, but be careful if you're buying calls or puts on this one, especially if implied volatility can collapse right out of the blue, whether it's going up or down. So while the implied volatility is going up, maybe here it was going up, you could see the implied volatility rank, and now it's coming in a bit, but still at the 100% level. So you can't really do anything with that. Anyway, I digress. And same picture for Micron. I've owned this for clients from the 60s. And I think we sold five or $600 calls on this one. And we are above our covered call, but those go out to all the way out to 2028. So we're not at risk of assignment. But they basically have blown through that. But we have a lot of time. Here's the candle again, 650 all the way back up to 762, 112 bucks in a matter of 4 trading days after hitting 818. My guess is if we have a bullish day tomorrow, this could easily climb up and take out the high, given the volatility. Look at this parabolic run, but again, just for just for fun, this one probably 100% implied volatility. Yeah, 106%. Not as bad as SanDisk, 85, 88, 72% IV percentile. And what that IV percentile means is that um, the IV of MU options has only been higher 28% of the time in its history, at least over the last year. So, redonkadonk volatility in these stocks. All right, take you back to my regular chart. We didn't do Russell. Let's do that. Russell 2000, these small caps had a longer road to get down here, and it did cross through some moving averages and bouncing off the lower Bollinger Band. But this one is bouncing back nicely and is also in the middle of its implied move for the week, which was about 75 points. And what did we have today? 27.98. So it's about 52 points yesterday and 60 points yesterday. So this thing is moving on a daily basis, although it's not making any progress. You know, you can see we closed here at 27.93 last week, and here we are 28.43. So we're up about 50 points versus last week. So we are up on the week a little bit, but nothing to write home about. Um, MACD is definitely on a sell signal, and RSI relative strength is no match for the SPX and the NDX. And we've got just we're a bit away from the all-time high, but we could get there in a couple of days, 28.88. So that's about what, 45 points away. Not too bad. Weekly chart, long tail there, and MACD is solidly positive, and we are not overbought on the RSI. And then finally, the monthly chart doesn't look as attractive as the other two, but forming a doji so far with one trading week left to go. MACD solidly positive. It just can't seem to get overbought or get into the 70 level for RSI on the small caps, and these obviously, oops, are more sensitive to interest rates than the NDX and the SPX. So there you have it. All right, let's take a look here. VIX. What is the old VIX doing? Hey, we're under 17. So, in all this consolidation, I think we hit 19.27, and here we are back to 16.76. The VIX was falling all day today, even though in the morning we had some downside volatility, but they started buying real near the open, and so nothing here. MACD here couldn't even get going. Looks like it wants to flip negative, but we're still under the 200-day. You can barely see it here. This red line with all the red in here. It can't seem to hold the 200-day for longer than the day. And I need to see 2 days above the 200-day moving average to get my attention. And here you go. Last week's doji is being taken out to the downside on the weekly chart. So VIX is basically dead. And I don't imagine that tomorrow, the day ahead of a holiday when a lot of people are taking the day off, a lot of traders are taking the day off, we're going to see much in the way of downside volatility, but it can happen. You never know. They might come back and say, "Oh, peace deal. We don't know anything about a peace deal," and you know what happens next. VVIX, volatility of the volatility, which is a measure of institutional hedging. Um, just nothing. It's at 91. It's not even in the warning area of the 100 to 110 level. So nothing to be concerned about here with the VVIX. So let's take a look at our VIX options, which this morning I think the calls were pricing out twice as much as the puts, but we did have a VIX futures expiration this Wednesday morning, and the VIX options expired on Tuesday on the close. So our next monthly expiration, where there's plenty of liquidity, is on June 17th. So that's about 26 days from now. And so with the VIX at 1676, let's call it 17. And if we want to buy the 18 calls, we're bearish on the market, they are going to cost us $2.19. And if we want the 16 puts, um, they're going to cost us about 13 cents. So I'm no mathematician, but over the calls are pricing out at 11 times the put. So this is a feather in the bear's camp. So this actually got stronger in terms of hedging and favoring the bears since this morning, since we were at like two or three times, and now it's about 11 times. So I'll be keeping an eye on this, but it at least tells me that this is one data point in favor of the bears as far as the VIX is concerned. Looking at the SPX, and I don't need to look at the VIX structure, the VIX future structure. It's in contango, it's normal. There's no elevated VIX to really justify looking at the VIX and seeing if it's in backwardation, because it's not. We know front month VIX is lower than all the other months. So we have one more trading day in this week. Ahead of a holiday shortened week. We have $51 of that $133 move left for tomorrow. And so if you do the math, 133 on average, a daily move of 26.6 points. And we have just about double that for tomorrow. So it should be some fun left in the rest of the week. So we got 2 days worth of movement into the last day of the week. And as far as I know, there's only like consumer sentiment tomorrow, in addition to a couple of Fed heads marching along. So nothing in the way of severe economic reports. Like I said, it should be a fairly quiet day absent any unexpected news. So where are the questions, guys? Everybody awake out there? I think some of you are already on vacation on long weekend. Let's see here. So attendance is light today, so I can see that there's hardly anybody here. All right. Well, they'll be listening to the recording and missing out. Anyway, if you have questions, put them in. So let's take a look at our trades. This might be a short webinar, and unless you guys have some questions, so let's take a look at our trades and talk about them. And by the way, uh, basically starting, um, what week is it going to be? Starting on June 25th, I'm switching to back to the old slot at 1:30 Eastern time for these webinars. So it won't be after hours because I'll be in Belgium for the summer, and I don't want to be doing these webinars at 10:30 at night Belgian time while trying to stay awake for you guys. So uh, that's probably in 4 weeks from now. So I'll be sure to put that in and remind you guys that we will be moving this webinar in 4 weeks. So I know some of you guys like that better. And if more people wrote in and said they'd like me to switch back sooner, then we can do that. So if you want to see it earlier, then I'll talk to Dan about moving it back sooner. But for right now, in about 4 weeks. So Adobe, we have 22 trades on right now, and some would say that's enough. All right, so this one is a lot of fits and starts. So we got a pop on Tuesday. Obviously, they sold into it and it's coming right back down. And I just have a feeling here. This is just a feeling that um, you've got the bears salivating here on any pop here, and they're about to get shemized. I think that's a word. Because, it wasn't enough that they got all this and they got screwed here, and then they call all the way down here, and then another one. Um, I would love to see a higher low here and for this thing to get going. We have a bunch of time until earnings. I think it's June 12th, so we have a few weeks, maybe at least two. So we took an optional profit target on this one, but really disappointing action afterwards. But they tried to push it down further today. I mean, as if $9.27 wasn't enough. But software names are catching traction, and call me crazy. We put a trade on and we'll see it on CRM. But this looks like a chart to me, the IGV, which is the software chart, that's poised uh, to keep moving. And I think we found a bottom here. Famous last words, we shall see. But in any case, if the IGV the software names are starting to catch fire, I mean, have you seen CrowdStrike? I mean, this is another parable kind of from 342 to 648. I mean, uh, $18 more, I think, and we'll have a double in a matter of 3 months on the stock like CrowdStrike. Palo Alto Networks, remember, Claude was going to basically replace all of these cybersecurity providers. Um, in any case, CrowdStrike is my favorite, but it's too extended right now. But I was mentioning, I think, a few weeks ago. All right, so Adobe, not great, but I have uh, faith that this thing is going to catch a bid. And today was let's sell the software stocks again and let's buy the chips or let's buy um, the memory stocks is what happened. So in any case, AMD, um, wow, this ended up closing positive on the day. Nice. Because this was down at one point. Um, yeah, this was down about $9. 431. It was down at 431 and closed at 449. So nice recovery on AMD. Too bad we didn't have calls, but there's no way I was buying calls. But this was a classic come in for a dip, fake out on the 10 EMA, and then bring them back up. I mean, this day was tremendous, and we took advantage of this to sell some puts, and we are at 85%. We've got about 78 cents left in these, and they expire next week. So AMD, MACD is not positive, but who cares? You should not go beyond a buck 75 now that we've harvested profit at $1.75. You should not let it get back below $1.75 before you let the rest go if you haven't. So if you got in, great. This one worked out pretty quickly. Love when that happens. Amazon. This one is looking like it's going to do the same. Made an all-time high, came in for a landing, fake out under the 21 EMA, and away she goes. We take out this PSAR dot, that'll be nice. Amazon, we have the June 265, 285 call spread. We're up 20%. Still haven't taken any profit targets, but MACD looks like it wants to flip over. Yeah, Amazon looking good here. You could still get this one. If it doesn't gap up tomorrow, you could put this on tomorrow if you don't already have it on. And our first profit target is $9.75. So um, generally, I don't want to be more than 5 to 10% above the original cost. But since this is a spread and we are still in range, let's say if we're under 270, you could probably put this on, but this is at your own risk. I'm not encouraging you or discouraging you here from putting this on if you don't already have it. BSX. Well, what do you know? Trying to get something going. Let's see. Healthcare stocks have been in the basement, but they're trying to make a stand here. But uh, these defensive stocks don't stand a chance if the tech stocks are going to rally, and uh, they just generally suck all the oxygen out of the room. But here we have uh, XLV starting to look constructive. But let's take a look back at BSX, our subject here. Um, what do you know? We're up 30% on this, and this was a roll, so we're not going to celebrate yet until we get this down under a buck and we can take some off and celebrate a little bit of a win. But we looks like we bottomed here at 52. We're all the way up to 57, so um, looking better. And this could get all the way up to the 50-day, and that will probably give us our first 50% profit target. So uh, BSX looking more constructive. MACD is now positive, and fingers crossed that we keep going. So the finger cross strategy is a technical strategy in trading. So if you didn't know, now you do. CRM. This one was also down a lot more today. I think we were down at 172, so we bounced $4 off the lows. I like how this is setting up. This is one you can still get into, but they do have earnings next week, so you got to be careful if you don't want earnings coverage. I put this on. I've had some CRM on. I've been taking some lumps as it's trying to bottom, but again, I think software stocks are starting to catch a bid. I think that anyone shorting them at this point is just being a pig. I'll just come out and say it. It's just you've had your chance, you had your time, but now this is, I think, ready to flip over. We've got MACD that's not terribly inspiring, but okay. And we have a middling RSI. So CRM, um, taking a counter trend trade, no doubt about it. But not too late to get into this one. Um, and I like how it's looking, and maybe we get a nice pop, short covering rally into earnings that allows us to take some off. And I know we're under the 200-day, we're under the 50-day, and I know all that jazz, but when institutions want to buy, they'll buy, and they don't really care ultimately, or at least a lot of them don't. They just see the valuation, and they decide they want to buy it. They're going to jump on it as a value stock. HRL. Well, you look at that. We strung together two green days in a row, and again, staple stocks didn't have a good day today because of da 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 da, Walmart. And I was looking to put on a trade here on XLP. I was trying to get us some calls, but I was hoping that we would get closer to 83. I had an alert closer to 83 to 50 days, see if we could get ourselves into some calls. And darn it, we came close, and I didn't catch the fact that this thing really bounced nicely off the lows. But in any case, I'll be watching it tomorrow, see what happens with this. Again, if the Mag 7 or the AI stocks are running, usually the defensive stocks are not. But back to the subject at hand, HRL, uh, starting to look a little bit more constructive, but I'm not going to get too excited because it's still living under the 50-day. And of course, the 200-day, this red line is all the way up here. So, but we did get a bullish PSAR and bullish, still a bearish chandelier. We need to get through this level, the 21.28 on a closing basis, to flip this. But MACD is positive and things are looking up a little bit. Maybe it's false hope, but you know, now we're only down 378% on this play. So I'm gonna have to check on those calls because even though we have 239 days, oh look, they posted the January 2028 calls. So um, that's still a 27 delta. I don't like that they're that far out of the money, but still can make money on it. We sold the 20s to buy the 25s, right? We sold the 23s to sell the 25. So those are in the money. And we have this. So we have a combo here. All right, I'm not going to get too excited about it until it starts running and we get a close above the 50 day. So, but looking better than it was. But of course, all these days, and I'm getting excited over a few up days. So I'll temper my enthusiasm. IWM, we have a short strangle. We're up slightly on it. We have until June 18th on it, so 4 weeks. We are coming into the week where I start making adjustments to these strangles. I generally don't want to hold them inside 21 to 23 days. So over the coming week after the Memorial Day holiday, we will start rolling these out and giving ourselves a little bit more flexibility. And we will probably go out another 100 days on them. And, you know, this one can be closed for a small profit, but you don't have to. And I'll probably be looking maybe at the September 18th to go out in time, perhaps August. 92 days. I really like something in between 92 to 120 days. So I'll have to decide which one I go. Chances are we'll go to September. By next week, that'll be 7 days less, so about 113. So it'll be close enough. But this one is okay, unlike our other two, and we'll hang on to it. JP Morgan, nice candle yesterday, and hopefully this means it's ready to um, improve. So if we take a look at financials, which have been uh, doggy doo-doo, um, going nowhere, up, side, just basically sideways for weeks, if not months now. And we need to see some strength from the financials if we're going to get a continuation to the upside on the market. But JP Morgan, my favorite of the money center banks, I keep saying that. We have a bullish PSAR, but a bearish chandelier. The chandelier is all the way up here. So 311, a close above that will flip that chandelier stop. And the chandelier stop, guys, is really akin to a volatility stop. It's not like the parabolic stop in reverse where when you hit it, if you're long, you flip short, and if you're short, you flip long. But right now, the PSAR is long, but the chandelier has not flipped up just yet. But this is a long-term play, and it's at $16.18. We're waiting for our second profit target. So hopefully you're hanging in there with me on this particular one. KIE really had a nice day on Monday. I'm not sure where this came from, but we'll take it. And after uh, a prolonged pullback here, it was nice to see a day like that. Try to extend higher on Tuesday, but this red line here is the 200 day. So trying to keep it in check. First test of the 200 day usually fails. And but if it tries again, I'm pretty sure it's going to get through it next time. But they try to sell it down. Boring insurance stuff, but sure nice to see that this one is hanging in there. We have a September combo on this one, and we've taken a couple profit targets in here. No harm, no foul. So we'll just hang in there with it. MACD is positive, and PSAR and Chandelier are both positive. So, woohoo! All right. So Microsoft, after a nice run off the bottom, 356, this one is really looking good too. It's shaping up, and we have a long-term play here. We've taken three profit targets. Last one is 43.50, and I set the next one at 48 deliberately. Kind of call it 2.5 times our cost basis. And we it closed at $40.80 and bullish PSAR, bullish chandelier. MACD is kind of sideways, nothing really exciting here. But again, another in the basket of software stocks that might uh, catch fire as the rest of the software um, industry. People catch up with the fact that software is not dead, certainly not yet. And when Jensen Huang is investing in now and other software stocks, um, he's also saying it they're not dead. But Microsoft looking good. Hopefully, we can get to our next profit target. Hope you're participating. Netflix. So, wish this thing would get in gear. Boy, when they split this stock, it basically lost its oomph. We just are not seeing the Netflix of yore. And so far, we've got a call in June. We've got 28 days. And by the way, because of Juneteenth, the next triple witching expiration is in exactly 28 days. So futures, options on futures, and index and stock um, options expire 4 weeks from today because the Friday, which is normally the third Friday of June, is the Juneteenth market holiday. So it will be a shortened options expiration week. So we are counting down 4 weeks from today till the triple witchings. So June expiration, 4 weeks away, and we need this one to get in gear. It's looking like it's trying to get above the 21 EMA. MACD is positive. Um, like to see this. This is in a range where if you have a long-term outlook, this is where I would be looking to buy shares, $92. And we have this in client portfolios. And at some point, this is going to start going, and hopefully it starts going soon for us while we have the calls. NVIDIA, talk about anticlimactic. So we closed what down about $4 today. I mean, anytime this thing tried to get going, there was someone there doling out shares and selling shares. It was like frozen in time. All these other stocks were, the SanDisks and the Micron and I can't say AMD was running, but for the most part, the SMH I think was up on the day, even though Nvidia was down. SMH is in. Yeah, Intel was down too today, but Nvidia just blew the doors off of earnings, and the crybabies on Wall Street thought it wasn't good enough. But basically, um, this is a stock, you could say who doesn't own it that has who wants to own it. And I'll say you could say that pretty much about any stock. And Nvidia is widely owned, no question about it. But in any case, we held this over earnings, and we have a vertical spread, which we rolled out from June, the 200, 180 put spread. We're down 10%. No harm, no foul. And this is kind of what I was expecting. Actually, I expected this put spread after earnings to be positive for us, regardless as volatility came out. But the $4 down today didn't help matters much. But we're at 220 and our short strike is at 200. Nothing to worry about here. The long-term play out in March 2027 is basically intact. It's at $35. We've taken four price targets, and we're waiting for our next one at 45. So Nvidia, no complaints here. They tried to sell it hard. They couldn't, but obviously it couldn't rally either. But there's shenanigans, and there's some people who saw the earnings and were, we're going to sell our position, and I know a lot of people who saw it, yeah, on this move, it's the end up there, and they sold. But I think they're going to be proven wrong. Nvidia has a $300 price tag on it within a year, in my opinion. So it's not over for Nvidia, in my opinion. And I don't know if any of you guys attended Dan's webinar this morning. I was not able to, but maybe he had some interesting things to say about NVIDIA. And maybe you guys traded it with him. Palantir. Here's one that I kind of liken to NVIDIA in that it reported stellar earnings, but basically it was met with a yawn. Right there, there's earnings. Um, and then they sold it off. But what have we been doing? We've been going sideways for a couple of weeks since earnings. So we have a bull put spread, the 135 100 put spread in July. Actually, we rolled out. We're up a whopping 5% on that. Again, here's a stock that will see 200 within a year again, and 400 in the future. So I'm long this, a lot of shares. My clients are long this. You should be too at this price. It's a good deal. And your stop is really convenient here if you don't really want to risk too much. 128.75, set your stop at 128 if on a long-term or a short-term position. And yeah, you might do okay. We also have a long-term combo. We've taken one profit target on it. We are at $15 below our first price target, but this is a long-term play, and I'm giving it more leeway. Our next price target is 21.75 on this. MACD flipping positive. Um, and if you're not in the bull put spread, you could put that on. Though, if you wanted a combo, then I would be looking for a different setup at this point, since this one is already in the money and has moved for us, but not too much. So Palantir, I like it and looking good. So QQQ, our pain in the rear. We have two plays, and hmm. So I guess we got our next profit target here. I'll have to double. No, we didn't get to $3. I was hoping for $3, basically at 20x, but we are at $1.54, which is about 6x or 8x of our cost. This is our bearish hedge, the inflection point spread. No, our inflection point spread. The 705, 665 bear put spread, financed with a September 30th 600 put spread. We've taken one profit target at $2, and I'm being aggressive trying to get $2, $3 out of it. We might not see that, but again, if you're holding this, you don't have to wait for my price targets. You can set your own depending on how many units you have and the size of your account. But this one's looking okay. But if we're going to rally to all-time high, obviously this is not going to do well. We have until June 12th, so we have a couple more weeks. 3 weeks actually, for this to continue to work. But our outlay was cheap. It was a 16-cent credit. The other one is the pain in our rear. This is the strangle. And we've come off the highs, and obviously it was looking better on Tuesday when we pulled in. But at this point, we're just going to look to next week to roll this out and collect some more premium and keep this going. We'll probably roll this out to September or October, given how deep in the money it is, and see if we can't salvage something out of this play. I gotta believe that in this midterm election year, we're going to see a correction sometime this summer, and this will give us some relief on this particular short strangle, which we're down about 200% on. So let's take a look at um, the puts. Were already up 58%. But obviously, the real pain point is the 650 short call here, which is uh, down $67 at least at this point. But we've harvested 250 here, 372, 174, 393, small consolation. But at some point, QQQ will correct and will give us what we need to get out of this particular play. SPY, similar type of deal. We have a short strangle going out to June 30th. This one we won't be won't be rolling this one next week since we have more time on it. Again, the put that we rolled to is 48%, still with $2.74, but it's the call that's now $25 in the money. Not as bad as the QQQ, but we'll just give this one a little bit more time and see if we can't salvage this particular short strangle play. Well, TLT, nice reversal today. It was looking like, oh crap. So we have two plays on TLT. We have our perennial, call it short put play, which is number 16 for us, where we're selling a naked put at the 84 level. We were down about 100% on it. Now we're only down 47%. It looks like the TLT is in for a rally. We got down to 82.77, and I didn't like the fact that it broke 84, and that was kind of my line in the sand. But it looked like yesterday it was starting to catch a bit, or at least a couple days, the day before yesterday, looked like it was due for a pause or a bounce. Whoops, what did I do? I didn't mean to click that. All right. Where's my screen? There we go. All right, daily chart. So we have the short put, we're down about 47% on it, not worried one bit. And we also have the back ratio. We sold 181 call, and we bought two of the 83 calls for about a 14-cent credit. Well, this says 15, but it was only 14. We're up 286.67%. So if you wanted to harvest a 28 cents profit, go for it. But my thinking is we'll wait till we can sell it for a buck and take some off here. So if TLT starts moving, then we should be able to harvest some nice profits. And so just so you know, this is the June, yeah. So when you have multiple units, let's say you have, call it five of those short and 10 long. Right? So what are these pricing at? Now it's at a 12-cent debit, so maybe these prices aren't exactly correct. I'll have to double check on it. But um, what you can do is if you get another really good day and you have a whole bunch of these, I'll put this in the Analyze tab, and something I mentioned in the trade. Whoops. Okay. So I'll max this one out. And you know what? I'm going to go off camera so I don't take up any more screen real estate. Okay. So what we have here is call it five short of the 81, 10 of the 83s. And that has a delta of about 234. So that's the equivalent of um, being long 234 shares of TLT, essentially. All right. So if we get a nice day and you have some profitable calls, you don't have to wait and take everything off as they went on. You might, decide to sell one of one of these and take profits on them and keep the rest. So in this case, go ahead and I'm going to sell one of these and now I still have a delta of 168. So I have five short, nine long. And this way you reduce your risk and you take some profits. And you probably don't want to peel any off unless you have at least, say, a 30% profit on these. And then time goes by and TLT is rallying, but not really to give us a whole big profit on the structure. It's not running away like you would hope with a back ratio. You could sell another one without touching the short calls. Okay. So you just have to keep an eye on your deltas. Now our deltas are down to 103. So we are net positive delta, but not as much as we were before. And so you probably don't want to sell many more here without the whole structure, without taking the whole structure off. But you get the idea here. You, if you want to manage each leg separately, I'm not a proponent of managing um, legs separately. My overarching philosophy on spreads is that what goes on together comes off together. But in the case where you are fighting against a potential valley of death, this is something you want to consider doing to protect yourself that the next day TLT gets walloped and now you have a short call in the money and now your calls are out of the money and they're going to start decaying and you're not going to be able to harvest the profits. So if you took one more off, um, in this case, now your deltas are only 36 deltas, and that's not something I would go down to 36 deltas. Let's call that you don't want to reduce your original deltas by more than um, call it by more than half. Okay. And obviously, as the market moves and as TLT moves, your deltas are going to change. But if you sold one and you sold two, now this is as far as I would go. We took it from 235 deltas to 103, and I would wait for this to appreciate more before I would consider taking more off. But this is a way of reducing risk, reducing your costs. And if TLT continues to rally, then that works for you. And if TLT doesn't rally anymore, at least you've peeled off some risk and taken some profits while your long calls will short. Hopefully, you'll find that understandable and helpful. And if not, write in a question for me and I'll try to address it for you. So, TLT, two plays. Tesla, we put on a long-term trade. Yeah, was it 3 days now? Jeez, times flies. So, yeah, I guess so. We tried to catch it here, and now we've rallied a bit, and we are up 31%. That's pretty good. Yeah, I wouldn't blame anyone if they decided to take. So we bought them at 980, 1289. That should have probably alerted an optional price target here. But I don't think this is done. I think we're just getting started, and this is a long-term trade. So I guess I wasn't terribly worried about this because our first profit target is at 50%. And if we have a bullish day tomorrow, my guess is we'll get it tomorrow. So, but if you want to tomorrow, if you have a 30% profit and you want to take peel 1/6, 1/7 of them off, go for it. And but this is really well, I guess I did this in June, so it's not a terribly long-term play. So yeah, we should take off some here. I thought this was right? This is a June 2018. Yeah, this is more of a short-term play. Let me make sure. Yeah, I thought we had a longer term play on here. Um, in any case, Tesla looking good and giving us, yeah, what should be our first profit target here. 30, whenever I get 30% on an option trade within 2 to 3 trading days, um, I take some off, just take some risk off. Last one we have is TTD. And this one is still thinking about rallying, but hasn't done anything wrong, hasn't gone anywhere. And it's amazing that um, there's just no demand for this stock. I'm surprised that it hasn't moved. And I really thought we should be buying calls here, but I guess I'm not so optimistic anymore about the call buying just yet. We're living under the 50-day, under the 21, under the 10. Just can't seem to get any lift here, especially as software stocks are starting to lift. So TTD, we have a bull put spread. This is uh, the June 22 and a half, 15. Is that right? We roll to the June 22 and a half, 17 and a half put spread. So we're up a little bit, but not much given that this was a roll. But yeah, I'm waiting to see a pop in this one. This kind of reminds me of what's the stock on Teams? Was that TEAM? Atlassian Corp, yeah. That one got going. Why doesn't this one? And what is the other one? Can't think of it off the top of my head. In any case, those are all our trades. So let's take a look here and see TLT. Let's say 1, 2, 3. I'm counting the red. 4, 5, 6, 7, 8, 9. So our batting average is better. So 13 out of 22 are green and 9 are red, at least the ones that are open, and essentially better than what we had last week, which is right around 50%. So good deal here. So let's take a look. Do we have any questions? Okay, Mr. Now I can't get, here we go. All right. No questions. Well, I guess this is going to be a short question. Anyway, um, yeah, that's everything I had for you guys today. And um, we will catch up again tomorrow and over the weekend on the weekend video. And I'll give you guys a second to put in any questions, last minute questions if you have them, but I don't think anybody's going to come up with a question at this point, but I thank you for participating today and not coming. And I will be in the room tomorrow and the videos over the weekend. I wish you a very happy Memorial Day weekend, enjoyable with the family, be safe. And thank you for flying with Team OMM. I will see you guys tomorrow. Thank you guys. Take care.